Bitcoin. For some, it is the future of finance, a decentralized revolution poised to redefine how we think about money value and ownership. For others, it remains a volatile digital asset, a high-stakes gamble in an ever-shifting market. As we navigate the complexities of September 2025, ignoring Bitcoin is no longer an option for any serious investor. The digital currency has woven itself into the fabric of our global economy, influencing everything from institutional investment strategies to the policies of entire nations. Understanding its trajectory is no longer just for tech enthusiasts. It's a fundamental piece of modern financial literacy. It's about being prepared for what comes next in our rapidly evolving economic landscape. The question on everyone's mind is simple yet profound. What is next for Bitcoin? Will it shatter previous all-time highs and embark on a new parabolic run, or will it face headwinds from regulators and economic uncertainty? The answers are never straightforward, but by analyzing the data, understanding the trends, and listening to the experts, we can piece together a clearer picture. This isn't about guesswork, it's about making informed decisions based on the best available information. That's precisely what we aim to do today. Cut through the noise, dissect the facts, and provide you with a comprehensive overview of Bitcoin's current standing and future potential. This is your guide to navigating the Bitcoin market of 2025. Before we dive into the nitty-gritty details of price charts, expert predictions, and regulatory news, I have a special offer for you. If you subscribe to our newsletter today, you will receive weekly insights like this directly to your inbox, and you will also get a complimentary copy of my exclusive ebook, The 5 Pillars of Personal Finance. It's my way of saying thank you for joining our community of savvy investors. Don't miss out on this opportunity. This essay will serve as your comprehensive briefing for Bitcoin in late 2025. We will break down the latest price movements, exploring the technical factors, fundamental factors driving them. We'll then turn our attention to forecasts from some of the most respected analysts in the financial industry, weighing their bullish scenarios and bearish scenarios. Following that, we will examine the ever-important landscape of government regulation. Finally, we'll look at real-world adoption by major corporations and countries. Let's get started and smash our way through the data so you can be better prepared. As of September 1st, 2025, the Bitcoin market finds itself at a fascinating crossroads, a delicate balance between consolidation anticipation, visual, live dashboard showing Bitcoin at $96,500 with trading volume, market cap, and 24-hour change statistics. After a turbulent first half of the year, significant price swings driven by macroeconomic factors shifting institutional sentiment, the digital asset has entered a period of relative stability. The price is currently hovering in the $95,000 to $98,000 range, a critical psychological and technical zone. This level represents a key support area that has been tested multiple times over the past quarter, demonstrating a strong base of buyers willing to step in and defend it. This is not a sign of weakness, but rather a market gathering strength for its next major move. Volatility, the hallmark of the cryptocurrency market, has noticeably decreased over the last few weeks. The average true range, or ATR, has fallen to its lowest point since the second quarter. This compression often precedes a significant price expansion, though the direction remains the primary subject of debate among traders and analysts. Market participants are watching closely for a catalyst, major regulatory announcements, significant institutional adoption shift in the broader economic climate. The quiet before the storm is palpable, and seasoned investors are positioning themselves accordingly for the breakout that many believe is inevitable. From a network health perspective, Bitcoin's fundamentals have never been stronger, providing a solid foundation beneath the fluctuating price. The network's hash rate, a measure of the total computational power dedicated to securing the blockchain, continues to climb to new all-time highs. This indicates that miners are more invested than ever, confident in the long-term profitability and security of the network. A higher hash rate makes the network more resilient to attacks and is often seen as a bullish long-term signal. It shows that the core infrastructure of Bitcoin is robust and growing, regardless of short-term price volatility, which is a crucial factor for long-term holders. Furthermore, on-chain data reveals interesting behavior among different investor cohorts. Long-term holders, defined as addresses that have held Bitcoin for more than 155 days, are showing strong accumulation patterns, with their total holdings steadily increasing. This suggests that the smart money is not being shaken out by short-term price action, and continues to view Bitcoin as a strategic, long-term store of value. Conversely, short-term holders have been taking profits in this range, contributing to the sideways price movement. This dynamic, where long-term investors absorb the supply from short-term speculators, is a classic sign of a healthy market consolidating before its next leg up. Analyzing Bitcoin's price chart on a higher time frame, weekly chart, monthly chart, gives a clearer perspective on the current market structure. The price is currently forming what technical analysts refer to as a bull flag, or a pennant pattern. This is a classic continuation pattern. It suggests the preceding uptrend is likely to resume after consolidation. The pattern is characterized by the strong upward move seen earlier this year, followed by the current sideways to downward channel. A decisive breakout above the upper trend line, which sits around the $102,000 mark, would be a strong confirmation of this pattern and could trigger the next major rally. Key moving averages are also providing crucial context to the price action. Bitcoin is currently trading above its 200-day simple moving average. The 200-day SMA is currently sitting near $85,000. As long as price remains above this line, the long-term bullish trend is intact. More immediately, the 50-day simple moving average is acting as a dynamic resistance level. The battle between buyers and sellers is being fought right at this line. A sustained break and close above the 50-day simple moving average would be a powerful short-term bullish signal, likely providing the momentum needed to challenge the $102,000 resistance and confirm the bull flag. Volume analysis further supports the consolidation theory. During the recent price drift within the $95,000 to $98,000 range, trading volume has been steadily declining. This is typical of consolidation, sellers losing conviction and supply drying up. Analysts are looking for a significant spike in volume to accompany any potential breakout. A high-volume move above resistance would signify strong conviction from buyers. The analyst community is currently a hotbed of discussion. Predictions for Bitcoin's year-end price ranging from cautiously optimistic to wildly bullish. A prominent camp of analysts, Goldman Sachs, JP Morgan, pointing to macroeconomic factors as the primary driver. Central banks are signaling a pause in interest rate hikes, and some are even contemplating rate cuts, making the environment favorable for scarce assets like Bitcoin. Their models project a year-end price target, $120,000, $140,000, contingent on continued dovish monetary policy and no major geopolitical shocks. Collage of headshots with quote bubbles showing predictions. On the bullish end, analysts focus on on-chain metrics and adoption cycles. Cathie Wood of ARK Invest reiterated long-term targets. The current consolidation is a launchpad. Move towards $150,000 by early 2026. Accelerating institutional adoption. Bitcoin as a hedge against inflation and currency debasement. Network effects from growing global usage. They see this as the final accumulation phase, before a new wave of capital pushes prices higher. A balanced view requires acknowledging cautious or bearish perspectives. A minority of analysts are sounding a note of warning, pointing to the persistent threat of stringent government regulation, United States, European Union, targeting cryptocurrency exchanges, or restricting self-custody. That could trigger a sharp market sell-off. Bearish scenarios often place year-end targets below current levels, $70,000, $80,000. They advise investors to remain hedged, and not to underestimate government's ability to influence markets. Finally, technical analysts focus on historical price cycles, particularly the 4-year halving. The last halving occurred in 2024. Historically, that kicks off a bull market peaking 12 to 18 months later. Cycle theorists say we're in the middle of that bull market. So, what does all of this mean for you, the investor? As we stand here in September 2025, Bitcoin is in a clear consolidation phase backed by strong network fundamentals with patient accumulation from long-term holders. Technical patterns point to a potential bull continuation. Key resistance, $102,000. Analysts are largely optimistic, some targets up to $175,000. Regulatory clarity is improving in the United States, Europe. This clarity is unlocking institutional investment corporations, adding Bitcoin to balance sheets, integrating it into operations. Nation-states are entering the market. Openly, discreetly, this creates long-term demand that can't be ignored. Prudent approach, informed patience. Consider dollar-cost averaging during lower volatility. If invested, review your thesis. Size positions to fit risk. Ignore short-term noise. Patience now could be rewarded later. Subscribe to our newsletter for updates. New subscribers get the free ebook, The 5 Pillars of Personal Finance, also read, The Rise of Real-World Asset Tokenization. Thank you and invest wisely.